Hey everybody, welcome back to the channel. Yes, I have a stick on my microphone so you can hear me, because this is important. Everybody has a question, like I have it too. What do we do? How do we prepare? You know, FP, you've got all these bad news stories, but what do we do about it? That's what this video is about. I've got a little bit of bad news. It's par for the course, but nevertheless, it's not good. It's about China selling bonds. Now, that doesn't, whatever, Chris, that doesn't mean much. It might. To the tune of 53.3 billion and Belgium 22 billion in treasuries. What does this have to do with us? I'm going to just hit a few highlights on this article, and then I'm going to share it on Twitter so you can read it for yourself. China, clear intention, reduce dollar holdings. The pace could accelerate U.S.-China trade war. Maybe that's the reason why. It doesn't really matter because it's happening. So the reasons don't make really much difference, do they? Now, if other countries continue to dump bonds at a staggering pace, what does that mean for us? I've got 4 things here that we should consider, and I think they're spot on. If you don't think so, please let me know in the comments. And if you have not hit the like button, subscribe, and ring the bell yet, please do. But for real, get in the comments. There's some good people in there that are wise. Number 1, currency depreciation. Selling of U.S. bonds can lead to decrease in demand for U.S. denominated assets. We'll talk a little bit more about denominated assets in a minute. A weaker U.S. dollar, it takes more dollars to buy the same amount of, usually goods and services is what I'd say, but in this instance we're going to say currency, foreign currency. More dollars to buy a different country's currency, meaning more dollars to buy imports. Does the United States import a lot of goods? I would say yes. Now, what about our exports? Okay, so it makes exports competitive when this happens. Imports more expensive, exports more competitive. Well, the US dollar is not an export, but it kind of is, because that's what we ship all over the world mostly. That's all we do is we buy goods from other countries. And now it's going to take more of the same currency to buy the same goods. Higher interest rates. That's number 2. We'll go back and talk about dollar-denominated assets because that's a good one. Higher interest rates. Prices of the falling bonds and their yields. So bond prices fall, yields go up. They have to attract investors somehow, and that's how they do it. They pay them a higher interest rate. Money goes where it's treated best. That's how they attract other investors. The government may need to increase its interest rates on bonds. This means a strengthening dollar. Okay? Strengthening dollar sounds good. However, it can also lead to reduced borrowing and slower economic growth. Higher interest rates is going to be really tough. I've been talking about 10%. Man, it might go way on up there. It's scary to think about, but I think it's in the mail. Inflationary pressures. If other countries continue to dump bonds, it may increase the supply of the US dollar in the market. Of course it does. Inflationary pressures. More dollars chase the same amount of goods and services. That's a pretty simple one. Anybody can go spend a $20 bill right now. It doesn't go very far. Loss of confidence, persistent selling of U.S. bonds indicate a loss of confidence in the U.S. economy. That's number 4, and it's the largest one. The perception of the dollar being the safe haven world reserve currency that it is, if it falls, If people lose confidence in the system, that's it. If other countries, and let's just say the world, if the world believes the government is printing too much money and borrowing too much money, why would they loan them money? Why would they want more of that? They were borrowing $100,000 a second a couple of weeks ago. I'm not saying I know it all by any means. I only know what's for sure. Inflation isn't transitory. They're not telling us the truth. I believe they're nut jobs. They are not willing to suffer at all. Inflation is the easy tax. It's the simple thing that nobody has to vote for that hurts the worst. I know they've got a few plans with their CBDCs and the world reserve currency and the New World Order and all the credits, all this junk. But before we get there, I think it's going to have to get a little bit worse, maybe a lot worse. Now, going back to denominated assets, U.S. denominated assets. I talk to people all the time about the price of metals and the price of it and that, and we're always denominating, me too, denominating it in U.S. dollar. When we buy a gallon of milk for $100, is that going to be a valid way to denominate that commodity? Probably not. Do you think a gallon of milk will go to $100? I do. 100%. You know why? Sounds crazy. That's what always happens. 100% of the time. Never fails. Oh, but Chris, we are the world reserve currency. It'll always be here, and will it hold value? That's the problem. Yeah, it'll be here. We might be sweeping it in the gutter, but it'll be here. It's all the same, guys. The bond dumping is probably just getting started. Other countries are moving to commodities. If you want to invest in precious metals, you're welcome to call my wife. She was a broker for Miles Franklin. She'll take very good care of you, but get 3 bids. Get the best price. Get the precious metals. I started investing a long time ago, and now silver went up to $31. It's like, wow, it's really keeping up with inflation. That's what it's supposed to do. It's, you know, I used to get a lot of flack about it, but now all that's real quiet. If you missed the silver video about the silver second chance, Monday or Tuesday, whenever we can look at the charts and it's not parabolic, we're going to try to find the next spot to get the best deal. And the silver second chance video was in at about 50 cents. And the one before that at the breakout was really close too. So I'm really pumped about that. That's really working out. And guys, that's really about it. Just prepare, keep your head on a swivel, do all that stuff, but learn monetary policy, learn everything you can, because that's how you're going to build conviction on what to do in the future. Have an awesome day. Later.